Hello, friends. This is Raj Sastry from Raj Option Trading. Hope you're all doing well. There is a lot of geopolitical tension. There is tension in Russia, Ukraine. Be careful out there. Buy some quality companies in this pullback for the long-term investment. So with that, what we'll do is we'll do a quick market update. Let's look back and reflect by looking at the past. What did stock market do when we had weak January and February? As a wise man said, stock market may not exactly replicate the past, but it typically rhymes. So with that, let's look from the past memory and see what we can make out. And also, typically when the market tanks, it's always good to buy great large cap stocks which are doing very well. Let's look at some of those names and go from there. So with that, let's jump in here. Look from a stock market perspective. Right now we are in a correction territory in all the major indices. Look on a 3-month basis, Dow Jones, S&P 500, Nasdaq as well as Russell all down big time. So that tells you it's light is at the end of the tunnel right now. It's always dark before the dawn. So we can slowly start buying some quality names here if you're a long-term investor. Long-term story is intact, as you can see here. Markets are doing very well in a longer term 5-year horizon, and all these blips are great buying opportunities when you look back. So this time it's no different. If you're a long-term investor, buy some quality stocks, buy some quality ETFs like QQQ, SMH, XLV, and so on and so forth. Great buying opportunity for long-term investors. And now let's look at how the market is doing. What I've done is I've looked at all the past history. Look, we got 2022, and so far S&P 500 is down 11%, and all the major indices are down this year, almost 2 months over. As you can see here, we got major indices down, with the exception of a few areas like gold and XLE, which is energy, as many of you know. Gold is typically hedged. When the market tanks, gold typically holds up the value, and this time energy is also holding up very well because energy got sold off back in 2020. And then you got here 2021. We did nicely. As you can see here, major indices are up nicely, with the exception of China, as you can see. And then you got, as you look through here, we got 2018, which is again a little bit weaker year. This is when Fed slammed the brake on the inflation and raised the interest rates aggressively. It also had some harsh words about containing the inflation further. That's why stock market tanked big time in 2018. Look, during that time we had consumer discretionary, and healthcare did very well in the high inflation environment, and so did utilities, which is XLU. And then you got, as you look here, 2008, which is a crisis when the whole market tanked. This is a financial crisis. It's a huge, big correction. I don't think we are into this type of correction. We are not in a systemic risk like we had in 2018. And one thing I missed is 2015. We had a small blip here. The stock market also came down slightly in 2015, and nothing major, as you can see here. And then we got here dot-com bust that happened back in 2000 actually, and we had a big crash. So that's what we see from the history. And now what we'll do is let's look at how did you do when the market crashed early on in the year in January and February. So as you see here, I got a chart here where I have looked at the past history and see when did the market tank both in January as well as February. So we are in 2022, as you can see here. We have market crash both in Jan and February. And for the February, I took the month to date performance, and then we got January. Look, we got a down month in Jan-Feb in 2022 across the board, with the exception of a few areas like maybe FXI here. January was okay, but Feb is down, as you can see here. Almost all indices came down in January and February. S&P 500 down 11%. And then we got 2020 here. 2020 we had a weak start, as you can see here. This is a COVID induced issue here, but overall stock market ended up nicely in 2020. It's a V turn as we call it. And then you got 2018. 2018 is when Fed increased the rate aggressively to combat inflation. Look, we're up in January, but February, March, April we're down because of Fed, raising the rates aggressively, and the market tanked 6.2%. This is S&P 500 when it comes to 2018. And then you got here 2009. Look, we had this huge issue with the 2018 market crash, the financial crash. All the big banks like Lehman Brothers and a couple others, Bear Stearns, bankrupted. Look, we did pretty okay in 2009 after the whole 2008 meltdown. And 2018 is a bad year because of the systemic risk in all the subprime mortgage, and market tanked big time. And 2000, this is where a dot-com crash, as many of you know here, market tanked 10%. So by looking at this, if you have to compare to a past year, I would probably compare current year to probably 2018, where we had a market crash in February, March, April, ended up down 6.2% in 2018. I think it's closer to 2018. So that's where I put the stock market right now. We are a little more severe than 2018, as you can see here. But 2018 around December we had major correction. So I suspect we are something along same lines here. Probably market will be down, say around 15 to 20% for the year max. And we should have some light at the end of the tunnel once this whole Russia crisis and Ukraine crisis sorts out. And as we combat inflation, I could see 2022 to be maybe down around 15-20%. I think that's where we got to look at quality stocks. Next, what we'll do is we'll look at some quality stocks and see what stocks we can buy. Look, so when the market tanks big time, we got to look at quality stocks with a large capitalization, large market cap. Look, we got top stocks here. I sorted these stocks by market capitalization. At the top, we got huge, big market cap companies like Apple. Also, look at the financial rating from Morningstar here, financial grade A, growth grade B, profitability grade A. Nice Altman Z score tells you this company is not going to go bankrupt, and nice overall score. And look, I've also added how the stock has done through various years in the past. 2022 so far, Apple down 9%, and look, Apple has done pretty okay in the past. Even back during the 2018 crash, during the inflation, Apple managed to be down just 8%, held up pretty well here. And Microsoft is even a stronger candidate. They had been down, as you can see here. Microsoft is down around 16% in 2022. But look, back in 2018, during the inflation, Microsoft managed to go higher. Mainly, it's a software play. They don't need to worry too much about what's going on, even though they got a good gaming business. So Microsoft is a solid player. You could take advantage and buy some Microsoft slowly. And it's a well-run company. And then you got Google or Alphabet. It's again a great company. You could take advantage. Look, Google has done pretty okay in 2018. Look, it's just down 3% during the high inflation environment. So far, it's down 11%, but typically it does very well. Look at the yearly performance. They managed to do pretty well in the past. That's why it's a solid company. You could buy Google also here. And we've got a few more. I will not go through all of them. Just take a look at this and look at how they've been doing. All right, so let's look at a few more here. And look, we got stocks like Amazon.com, which is one of my favorite. And look, Amazon also did pretty well here in 2018. They managed to go 26% higher. Amazon is always a good one to buy, but they're down so big this year. It's a good to slowly start buying some Amazon here. And look, Nvidia, folks thought Nvidia is really resistant to all this downturn, but Nvidia also came down nicely in 2022, and during the high inflation environment, Nvidia came down 33% back in 2018. So at these levels, you could slowly start buying some Nvidia, given they're down big time. Then we got Meta here, Facebook. Look how much they're down. They're down 41% for 2022. That's a huge, big downturn. But during the high inflation environment back in 2018, Facebook was down 28%. I say Facebook already had a good correction here. You could start buying some Meta or Facebook up here. And look, we got energy. Energy doing great. Look, Exxon Mobil up 25% for the year. So I would say maybe, don't buy at the top. Wait for it to settle down here. It's a little bit too hot for me at these levels here. On the other hand, you could buy stocks like Home Depot down 25%. And this was Home Depot down 9% in 2018 during the high inflation environment. I think it's a good one to buy here. So with that, let's jump in and look at the few more stocks here. And this is the continuation, as you can see here. Look, we got a few stocks which are doing well. Look at ABBV, which is one of my favorite medical, healthcare stock. Look, it's doing pretty well in 2022, up 8.4%. And RSI is 70. That tells you it's very hot at this time. If this comes down, you could buy some AbbVie here. It's a good one to play. And then you got a few more as you can scan through here. Look at the 2022 drop in ASML. It's one of my favorite stock. It's down big time. You could take advantage. And back in 2018, it dropped around 12%. I think it's a good one to slowly start buying. I also like our Broadcom here. It's also a great play here. It's already down big time, 15%. You could buy this quality company slowly. And we got a few more here. Cisco is pretty strong after the earnings. You could take advantage and buy some Cisco also here. They will do pretty well. It's they got solid business, as many of you know. And Eli Lilly is one of my favorite stock here. You could buy some Eli Lilly here. Look, 2018 it went up nicely, 37%. At this time it's down 13% for 2022. It's also a great one to buy here. And then you got a few more. I will not talk about all the stocks here, but keep watching 2018 and see what stocks have done well in 2018 during the high inflation environment. We got Eli Lilly, and look at, we got a few more stocks which have done well. We got Abbott Labs, a great one. You could buy that one too. And you could look at some more names like Adobe did well in 2018. And then you got Merck and Salesforce.com. You could take advantage of such names here and slowly buy. All these stocks are high market cap companies. They got resources to really withstand this market sell-off and thrive. And finally, let's look at the last page here. We got a few more great stocks here. Keep watching 2018. That's the high inflation environment. Look, AMD has done well in 2018 during high inflation environment. AMD down big time. It's a quality stock. You could buy some AMD up here and slowly accumulate. And then we got a few more here. We got Netflix did very well in 2018. And look, right now it's down big time, 39%. I think it's a good time to slowly start accumulating some Netflix. Netflix with the Reed Hastings, they always come back strong. Then as we scan through, we got a few more here. We got Lowe's, which is also a good one here, down big time. Managed to do very well in 2018. You could pick up some Lowe's also here. And you got two more here. NextEra Energy, one of my favorite. You could pick up that one too. Did very well in 2018 during high inflation environment. And right now they're down big time, 22%. It's a good one to buy. And you could look at stocks like Medtronics, which is beaten down big time, 11% in 2021. Now it's trying to improve here. You could buy that one also. It's a recovery play. Its stock is recovering as we speak from the huge big downturn here. And then we got last one here, INTU, one of my favorite. You could buy some INTU. INTU has done great in 2018, up 24%. Right now, like as you can see here, INTU is down big. You could take advantage and buy some quality stock like INTU. and go from there. So with that, as you look through this, look at how stock has been doing consistently. If you see stock which is doing consistently well across the board, go after those. Look, Netflix, even though it's down this year, it's done consistently well in the past. You could look at such stocks here. AMD, same story. You want more greens in throughout the years than more reds. Intuit, solid player. Look at Intuit here. They almost did very well in the past year. This year they're struggling a little bit. It's good to slowly buy some Intuit also here. So with that, I will probably end here. Thank you very much. Happy investing and trading. Take advantage of the sell-off and buy some quality companies. Build your portfolio for the long term. With that, thank you very much. Happy investing and trading. Please subscribe.